Ladies and gentlemen, good day and welcome to the Dhampur Bioorganics Limited Q4FY25 results conference call hosted by SKP Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Pachisia from SKP Securities. Thank you, and over to you, Mr. Pachisia.
Thanks, Michelle. Good afternoon, ladies and gentlemen. It's my pleasure to welcome you on behalf of Dhampur Bioorganics Limited and SKP Securities Limited to this Q4 FY25 financial results conference call. We have with us Mr. Gautam Goyal, Managing Director and CEO, and Mr. Nalin Gupta, CFO. We will have the opening remarks from Mr. Goyal, followed by Q&A session. Thank you, and over to you, Gautamji.
Thank you. Good afternoon, everyone, and thank you for joining us today, and thank you, Vaibhav, for the introduction. We are here to discuss DBO's operational and financial performance for the quarter and full year ending 31st March 25. The results and investor presentation have been uploaded on the stock exchanges and our website. I trust you've had an opportunity to review them. On the sector overview, the sugar production for the current season for the country is estimated at 26.2 million metric tons. This excludes 3.2 million metric tons diverted for ethanol. Approximately a 15% decline year on year. This reduction is driven by a lower output across Maharashtra, UP, and Karnataka. The production for Maharashtra is expected to be 8.1 million tons versus 11.1 million tons last year. UP at 9.25 million tons as compared to 10.4 million tons last year. And Karnataka at 4.2 million tons as compared to 5.2 million tons last year. Closing stock is expected to be around 5 million metric tons, while the domestic consumption is estimated at approximately 28 million metric tons. The government permitted 1 million metric tons of sugar exports this season, of which about 700,000 is expected to be exported. However, we do expect about 200,000 to 300,000 of sugar not to be exported in the current year. Following the export announcement, the ex-mill sugar prices rose by approximately 3 rupees a kg, which was a much needed boost required to cover the cost of production, and this also helped bring down the cane price arrears. The Government of India has recently announced an increase of 15 rupees per quintal in FRP for the season 25-26, which will enhance the cane price to 355 rupees per quintal. The industry continues to advocate for price linkage between sugar, ethanol, and FRP to improve the long-term stability. The ethanol update, a total of 1053 crore litres has been allocated by OMCs during ESY 24-25 ethanol season 24-25. The feedstock mix is as follows. Sugarcane juice quantity allocated stands at 195.61 crore litres. B heavy molasses at 132 crore litres. C heavy molasses at 13 crore litres. Special food grains at 119 crore litres. Damaged food grain at 107 crore litres and maize at 485 crore litres. The sugar sector accounts for 341 crore litres, which is approximately 32.4%, and the grain sector at 712 crore litres, which is the residual 67.6%. Coming now to DBO's performance highlights for the financial year 25. We recorded a revenue of 2,713.86 crores in FY25, 14.94% increase year-on-year, driven by growth in sugar and country liquor segments, which were up 9.29% and 55.63% respectively. EBITDA for FY25 stood at 144 crores as compared to 162 crores last year. The PAT for FY25 stood at 12 crores as against 49 crores last year. The board has approved a dividend of 1.25 per share for the current year. Sugar production declined to 3.1 lakh metric tons versus 4.23 lakh metric tons last year. A diversion of 3.37 lakh tons of cane was diverted towards ethanol production this year. There was no diversion of sugarcane syrup or ethanol in the previous financial year. Disease and pest-related issues adversely impacted our net recovery, which fell to 9.8% versus 10.32% last year. Ethanol produced during FY25 stands at 60.98 million BL as compared to 93 million BL in the previous year. Power generated during FY25 is 22.3 crore units versus 30.3 crore units in FY24. The country liquor sold during FY25 stands at 37.6 lakh cases as compared to 25 lakh cases in FY24. We remain committed to improving agronomical practices by working closely with farmers to adopt high-yielding varieties and continue to address internal bottlenecks. Now, with that, I now invite Nalin, our CFO, to walk you through the financials in greater details. Thank you.
Thank you, Gautam, and good afternoon, everyone. I will take you through the standalone financial highlights for the fourth quarter and full year FY25, followed by a detailed update on our segmental performance. Starting with the company level financials, revenue for Q4 FY25 stood at 702 crores as compared to 595 crores in the same quarter of the previous year, backed by strong performance across all segments. EBITDA for the quarter stood at 100 crores as compared to 87 crores in Q4 FY24. Profit after tax stood at rupees 40 crores. For the full year 25, revenue was recorded at 2,714 crores as against 2,361 crores in the previous year. EBITDA for FY25 stood at 144 crores. Profit after tax for the year was 12 crores. Now moving to the segmental highlights, beginning with the sugar segment. Revenue for the sugar segment for Q4 FY24 was 443 crores as compared to 438 crores in Q4 FY24. EBIT for sugar segment was 83 crores in this quarter as against 68 crores last year. Sugar revenue stood at 1,748 crores in FY25 as against 1,590 crores in FY24. EBIT from sugar segment for FY25 was at 109 crores as compared to 79 crores in FY24. Sugar production for FY stood at 3.1 lakh tons as against 4.23 lakh tons in FY24. Net recovery for the year stood at 9.8% as compared to 10.32% in FY24. We sold 3.5 lakh tons of sugar in this year as against 3.03 lakh tons which was sold last year. Average realization was 39,370 per ton in this year as compared to 38,350 per ton in FY24. As of 31st March 25, sugar inventory stood at 2.22 lakh tons, which has been valued at 37,662 per ton, as against 2.69 lakh tons, which was valued at 34,750 per ton last year. We exported 71 million units at an average realization of 3.44 per unit in FY25 as compared to 96.81 million units at 3.44 per unit in FY24. Now turning to the biofuel and spirit segments, revenue for the biofuels stood at in Q4 FY25 stood at 116 crores as compared to 99 crores in Q4 FY24. EBIT was at 4 crores. For the full year, biofuel segment revenue stood at 343 crores in FY25 as compared to 521 crores in FY24. EBIT from this segment was 11 crores versus 56 crores last year. We produced 60.98 million bulk liters of ethanol this year out of which 19.23 million bulk liters from B heavy, 22.82 million BL from syrup, and the balance from C heavy molasses. Ethanol sales for FY25 were 50 million bulk liter at an average realization of 60.61 per bulk liter as compared to 82.68 million bulk liter at 58.81 per bulk liter in FY24. Of the total sales, 17 million bulk liters came from B heavy ethanol within an average realization of 59.7 per bulk liter. Ethanol stock as on 31st March 25 stood at 4.62 million bulk liters as compared to 7.74 million bulk liters last year. Now moving on to country liquor segment, revenue from country liquor segment for Q4 FY25 stood at 265 crores as compared to 148 crores in Q4 FY24. EBIT from this segment for the quarter was 4 crores as compared to 2 crores in Q4 FY24. For the full year, country liquor revenue stood at 925 crores as against 590 crores in FY24. Segment for the full year from this segment stood at 14 crores as compared to 9 crores in previous year. We sold 37.64 lakh cases of country liquor in FY24, up from 25.04 lakh cases in FY24. Long-term borrowings as on 31st March 25 stood at 309 crores as compared to 241 crores as on previous year, while short-term borrowings of the company are at 844 crores as compared to 806 crores as of previous year. With that, I would now request the moderator to open the floor for the questions, please. Thank you.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nitin Dharmawat, CFA from Aurum Capital. Please go ahead.
Yeah, thank you for the opportunity. Am I audible?
Yes, sir. Please proceed.
Yeah. So what is the outlook for sugar realizations in the domestic and export market this year? Because there is some price hike that we have seen in the sugar. So can you please elaborate on that?
Sorry, I couldn't understand. You said outlook for domestic and export.
Correct.
So, I would imagine for the export, as you're aware, the government allocated 1 million tons of gave a permission to export 1 million tons. It is our belief about 700 to 800,000 tons is the sugar that will get exported. We as a company decided to sell our export obligation. We've sold pretty much 99% of our export obligation. We have small percentages which we have to export to our institutional clients. And for the domestic prices, we don't, and international prices have come down, so we don't expect we think there will be about 200,000 tons of sugar which will not get exported. On the domestic front, I think the prices should remain firm. They have been holding steady. The closing stock is manageable, and the FRP increase should also help keep the prices stable to firm.
I understand. And are there any anticipated changes in government policies with respect to sugar MSP? Though we already seen the retail market sugar prices have gone up. Do you see any changes over there?
We have been asking about a linkage as an industry, that there should be a linkage of sugar prices and ethanol prices with the cane price. But as of now, we don't have anything firm to suggest.
I understand. And what is our current debt level overall and capex plan 1 to 2 years? What is the funding requirement for that? Because we had kept capex on hold in the previous call you mentioned about it. So is there any change on that?
So there is no change on that. There should be marginal capex on account of any substantial wear and tear. We have adequate capacities in our I think the work, as we mentioned, will be on cane development and increasing the cane quantities, either by better yields and better planting. But for the foreseeable future, we don't have any major capexes we have no major capexes planned this year.
I got it. Thank you so much, and wish you.
Thank you. The next question is from the line of Nitin Awasthi from InCred. Please go ahead.
Hello, sir. I wanted to understand a few things on your country liquor segment as a whole. So the whole market as of now in UP would be somewhere around 110 million cases. Would that number be right?
I think it's about 100 crore. Yeah, so UP is broken into two parts. One is the grain UPML and country liquor. If my memory serves me correct, it's about 100 crore liters, 100 lakh cases, like you said.
Okay, so both of them combined.
All right, yeah.
Okay, so
We lost you there.
We lost. Sir, in that case, we'll take the next question from the line of Vikram Suryavanshi from PhillipCapital India. Please go ahead.
Hi, good evening, sir. Congratulations for good performance given the challenging time we have. In this quarter or full year, what was the export sugar revenue or volume, what you can share?
Sorry, we lost it. You said export revenue. Thank you for your good wishes, Vikram, and we missed you in between. You said export revenue.
Export revenue or quantity, because since we also got allocation of export, so was there export sale accounted in this quarter?
So we didn't export. We sold pretty much all our quota, which got accounted in this quarter, and some of it probably all got accounted in this quarter. We have very small quantities, something very small quantities, a couple of negligible quantities of sugar, which we hope to export to some of our institutional clients with who we are in at different stage of negotiations and QC approvals.
Okay. I was trying to get because of just to see the impact of additional quota because of export, or will this be run rate for next quarter also as a sales volume? So from that point, I was trying to understand.
So the quota that we have sold, we will continue to get the additional release on account of the sugar that got exported out of our quota. So we expect 10 to 15,000 tons of sugar, 1 to 1,500 tons of sugar to be coming into our releases on account of the quota sale.
Okay. And what we have seen the significant impact in the recovery, how are the early signs in terms of varietal replacement or probably coming back to the normalizing of the recovery rate in the coming cycle? If you can give some feedback on that.
So see, varietal replacement is going on at full speed. So the tune, of course, there will be more through 3.8, but I think we do hope that the most infested part of 238 would have been uprooted. On the plant case, from our perspective, a sizable, at least about 30 or 35% of the variety has been replaced this year. And we continue to work hard to maximize productivity and recovery by managing both red rot and pests. So fingers crossed, we hope to come back with a stronger recovery in the coming years.
Okay. And with the view to increasing the sugar prices, how is the outlook on ethanol expected in terms of coming season? So we'll try to maximize it, or still probably think since sugar is giving better profit, how that ethanol volumes will pick up in coming season, and situation from the grain to our that dual feed also, if you can give some outlook.
So like you said, interesting, great question, because our grain plant is pretty much ready for operation. We have got the latest tender which the OMCs released with FCI rice. We have about 25.5 lakh liters, which we will be supplying from our grain ethanol plant. In the coming year, we do anticipate to be using at least 30% or 25 to 30% of our capacity, distillery capacity, to supply ethanol with grain. We don't anticipate at this point of time, it's too early to say what the final pricing will be, but probably if the current trend continues, we will not be diverting sugar into syrup. It could be a combination of B and C, but let's see what are the prices for the coming year.
Understood. I think because FRP for cane has been increased, but I think for us, SAP is more important. So, till the SAP is announced, I think we can see, or is it like a similar increase we can see in SAP also, how we are factoring that? And we are really failed to understand that ethanol price has not been revised for 2 years, but what is government thought process for not increasing it, or even for MSP also?
Because, we hope that what you say, the government will also listen to you. We have been pursuing them aggressively, both on account of sugar prices and ethanol prices. So I think the export decision was in the right direction. The government did feel that their prices needed to correct to get the industry back in its proper health. And hopefully the same thought process will prevail when the time comes to refixing the ethanol prices. But I'm sorry, I can't give you any comment on government thinking.
Okay. Sure. Thank you.
Thank you so much, sir.
Thank you.
Ladies and gentlemen, a reminder to all the participants that you may please press star and 1 to ask questions. The next question is from the line of Nitin Awasthi from InCred. Please go ahead.
Hello, sir. Hope I'm audible this time around.
Yeah,
yes, sir, you are audible.
Okay, great. So I was asking earlier, so we would be having around 4% of the whole industry market share. However, this liquor that we're selling is mainly to meet our levy obligation. So profitability is not something that is looked at in this whole pie. Is that understanding correct?
So listen, I think now we've reached a stage in the short span of 2 years where we are going to be selling now, if at the current run rate, we should be selling beyond our levy obligation. In fact, we have now started buying levy molasses. We have distillery capacity, so we do hope this will help enhance both, will also help towards augmenting the profitability in the coming years.
Understood. So this is where I was getting at. So the current year, we were basically close to our levy quota, and now we have expanded our capacities. We are at 8 million cases capacity, which is currently up and running, if I'm not wrong.
Yeah, so we have now, so we will be going, our grain plant is coming on stream, so we will have the opportunity with some of that capacity is earmarked for UPML. And our distillery capacities are also available now that, with the current format, we don't anticipate much of syrup diversion. So we expect to be continuing to buy levy molasses to feed the enhanced, to try and gain some more market share.
Understood, sir. The 100 KLPD grain plant that we have, we are allowed to produce ENA from that plant to make UPML?
Yes, we are not in the B2B sort of, we have, our grain plant is a dual, it has both ENA and ethanol, and we could be using some of it for potable liquor purposes.
Understood, sir. And for the profitability to grow going ahead, would the absolute realization per case be higher? Hence, you have a bottom line coming, because currently at the price you are hardly having any PAT. So would we be crossing 300 rupees, 350 rupees a case, somewhere around there?
So see, it's a combination. Right now, you're basically, we do expect certain, cost savings to come in. We have to continue to increase market share. But see, our capex is only on the bottling capacity, not so much on the distillery capacity. So
correct.
We do hope to increase profitability by cost reductions, improved margins. And also, I think the principal focus is to get market share at this point of time.
Understood. So if you go complete utilization at 8 million, what would be your position in the UP market?
I think that's too optimistic to imagine that we'll do 100% capacity. We have to have a ability to take advantage of opportunities, but we hope to get to 5 to 6% in the coming year is what our internal targets are. We at least get a 30 to 40% year-on-year growth.
And that would make you which number as a player in European market?
As of now, we are, I think, number 7. I think we should be 6, between the top 7, 5, 6, 7, we should remain in that level.
Understood, sir. Understood. Thank you, sir.
Thank you.
The next question is from the line of Suraj Khaitan from SKP Securities Limited. Please go ahead.
Thank you for the opportunity. So my question is, what is our outlook for the next sugar season regarding cane availability and yield, given we will be one more year from red rot impact?
Yeah, Suraj, so we are working hard. Our planting is pretty much over. We have our cane teams and all of us are working hard to maximize the availability for next year by ensuring that the yields of our existing cane crop, whether ratoon or plant, are sort of at the higher end of the spectrum. So next year, UP as a whole, and we don't anticipate much of a bounce back. And for us, I think the overall increase in area is not really there. So whatever increase we will get will be on account of better yields, and if the weather continues to remain favorable and our cane development efforts bear fruit, we should hopefully remain stable to a little bit up. But very early to say right now. It's too early. I think we get a clearer picture in the month of August, September, when the monsoons and all have all played out.
Thank you. Thank you for the answer, sir.
Thank you, sir.
Thank you. The next question is from the line of Udit Gupta, an individual investor. Please go ahead.
Good afternoon, sir. Sir, I've heard that this year the farmers are shifting to other crops like corn or popular. Sir, how is the acreage in our area expected next year, and is the acreage expected to fall?
Yeah, hi. So you're right in some ways that there is some migration of farmers to other crops. So we too have experienced some of that in our areas, namely in Asmoli and Mansurpur and Meerganj, not so much in West UP. But we have been able to minimize that impact, and as I was mentioning before, we hope whatever that 3-4% drop in planting area in these two units, we should be able to recover that and more with better yields. That is what all of us are working hard towards.
So the drop in acreage could be about 3-4% for us?
Not for us. I mean, 3-4% in the two of our units, not in the Mansurpur unit, which is in West UP.
Okay. So overall, the number would be about 2-3%.
But that's only on planting the ratoon. There will be some uprooting of ratoon which was infected. So yeah, you could see 2-3% drop overall. But we hope to put that in with better yields.
And sir, recovery is also expected to improve this year? I mean next year, next season?
We hope so. I mean, for sure, we really hope the recovery should improve next year for us.
And sir, this grain distillery that you were just talking about, that it should contribute about 20-30% or something. I got disconnected that time. Sir, this is likely to run on corn or rice, or sir, what do we plan to run it on?
Our distillery is capable to run both on rice and on corn. Depending on the tender, the feedstock availability, we will switch accordingly.
Right. And sir, by when will we start that grain distillery?
Now we are contracted to supply the Q3 cycle of FCI rice. So I think we should be starting a grain distillery by end of the month, early next month, and 25.5 lakh liters of grain FCI rice ethanol that we have to supply, we'll start supplying that from that part.
So we'll buy the damaged rice from FCI and then supply that?
We have already got the allocation, so there was a tender that buying the damaged rice is as per the government protocol, and we've got a quantity for 25.5 lakh liters has been approved, and accordingly the FCI rice will be allocated to us.
Right. And sir,
Mr. Gupta, I'm sorry to
interrupt. Thank you. Thank you
so much. Thank you, sir. Participants, you may please press star and 1 to ask questions. We'll take the next question from the line of Ankit Minocha from ADZ Ventures Family Office. Please go ahead.
Yeah, my question is with regard to the red rot disease. I mean, the scenario on ground, is it worse than H1 of next year? As in, does H1 of the current year look worse than H1 of last year, or does it look better?
The red rot disease is a little early to say, because the true impact of red rot is only a certain post-monsoons. It's a waterborne disease. So, but if all the measures that all of us are taking, including the farmers, we hope the impact will be lesser this year.
Okay. And what is the reason for the margins for the ethanol segment to be lower than usual?
Because again, because of lower, the impact of recovery, therefore there was lower sugar available in the molasses. We diverted syrup also. The impact of recovery, which increases the cost of production of sugar, also increases the cost of production of ethanol, especially when you're making it with syrup or B-heavy.
Understood. And I also saw that you just announced a dividend, but with the debt, I mean, was the dividend the ideal capital allocation strategy? And considering where the share price has reached, any consideration regarding buybacks or additional stake?
So, dividend is, as per our giving corporate policy, a certain percentage of our profits. We do hope to give, and our debt equity ratio is fairly comfortable. As we already mentioned, we have no real capex plans in the future, in the sort of foreseeable future. So we are not overly concerned with the debt amount, and we do think that will come down substantially now that we don't have any real capex planned. So at this point of time, once again, like we said, let's bring our debt down and let's get the numbers, and then we'll look at buyback post that.
Thank you, sir, for answering those questions. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to Mr. Gautam Goel for closing comments. Thank you, and over to you, sir.
Thank you all. Thank you very much. And if you have any questions which remain unanswered, or for some reason you could not ask them, please feel free to send them to us on email, and we will reply to them at the earliest possible. Once again, thank you very much.
Thank you, members of the management. On behalf of SKP Securities, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.